for currency traders, you're in luck. We got some fun stuff to talk about. Let's start with the RBA. The Bank of Australia came in, and this was like a repeat of JP. Okay, the RBA came in. This is the Bank of Australia. Okay, so their central bank. If you're somebody who watches, currencies, the Australian dollar sank pretty hard here recently, in the last day or two, because during their latest statement that we saw last night, for me, I was asleep, but during that, we heard what echoed very eerily similar to what Jerome Powell said. People thought exactly. People thought going into that this report that the Bank of Australia basically would come in more hawkish than expected. Similar to what people thought with Jerome Powell. People thought Jerome Powell was going to come in and just rate hikes are still on the table, and inflation has reversed course, and that's what everybody thought Jerome Powell was going to say. And then he didn't say that. He said, we have James ready for the soundboard. We're relatively strong economy.
Right? The economy is strong.
Yeah, James is good on the buzzer, guys. Got to be careful with James on the soundboard. Exactly. Okay, so anyways, Jerome Powell comes in less hawkish than people were fearful of, and the same can be said. It was like a repeat event for the RBA, and so now the Australian dollar, after tagging resistance for my currency traders on the daily chart, the Aussie dollar looks like it might be pulling back here. Now, is this the start of a bigger sell-off? Well, it could be. The if we take a look at the Australian dollar on the Edge Finder, you can see it's not even on one of our setups here. If you take a look at the Australian dollar against the US dollar, you can see it's just got a neutral reading. So there's no trade here for me, but I think it is mentioning that if you're a currency trader watching Aussie pairs, it looks like in the short term we may be getting an in line with the rest of them, if you will, RBA, right? Seems like they're dovish enough, just like the Bank of England is likely to be slightly dovish tomorrow. We hear from the Bank of England, if you're somebody who watches pound crosses, pound pairs will likely move tomorrow. We have the Bank of England, and I believe we have the bank rate votes, which is always interesting. So from a central bank perspective, from a global perspective, it seems like the trend is now towards dovishness. And you may say, well, I don't really trade the Australian dollar, or maybe you don't trade the pound, but remember, currencies all impact one another. Other central banks coming out more dovish is arguably bullish for the dollar. If we see, the Jerome Powell comes out and he's a little bit more dovish. But if all the other central banks who are now coming out, if they come out and match or even one up that dovishness, it's sort of like a best of the worst case scenario for the dollar. Maybe the dollar index is back on top simply because the other ones look like they're going to be cutting rates even sooner. In fact, I believe that when we talk about the pound against the US dollar, so for the Bank of England, expectations are for rate cuts to happen as soon as August. So the consensus right now, again, we've got tomorrow as a potentially big event. It seems like inflation, at least from Governor Bailey's perspective, the governor of the Bank of England, his perspective is that inflation is coming down and that will likely, reach their 2% target. So 2% target is on the way for the Bank of England. But to add context to that, the expectation is for an August rate cut for the UK. And so if that's the UK and the US is talking about September, still slight bias there towards the dollar in my personal view. So taking a look at the pound on the daily chart, you can see we tried to really test getting through this level. We poked higher here and then big rejection on this candle. And now again, kind of reversing course. Looks like it might just continue the big picture downtrend that we've seen on the daily chart since that big top in March of this year. So really interesting to keep an eye on for the currency traders out there. It does seem like this level of resistance for now continues to hold for sellers. And yes, the dollar had some light prints, PMIs, advanced GDPs. But this is the confusing thing about currencies.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
The reason currencies are tricky, really tricky to trade, is because you have to be aware of not just one of the currencies, but both of the currencies. Because if you looked at just the US data, you might say the dollar should be weak right now. Everything came in super light. Jobs, advanced GDP, PMIs, data's coming in light for the US. Why isn't the US dollar weaker? Well, remember, when you're trading currencies, you have to consider both currencies, and it's why currency trading is inherently very difficult. The majority of my trading is not currency pairs for this reason. There's just so many spinning things to keep an eye on with currencies. And while, yes, you totally can do it, and I do trade currencies, where I'm most comfortable is really focusing on the US dollar. And so when I just want to focus on the US dollar, I focus a little bit more on US bonds, gold, stocks, right? Because then I can just really hone in mostly on the US and not have to, dance around with all the central banks. Again, I'm still very much, keeping up with, because it's my job. I'm on a podcast, twice a week for marketpulse.com. I have like a day job basically where I'm on there talking about currencies, talking about, highly recommend, by the way, if you're not listening to the podcast, we have a lot of fun doing it. It's a very currency focused side of things. Still am very much in the line with currencies, but remember, currencies, you're juggling two central banks now rather than just one. So just personal preference, but for me, actual execution, I prefer trading indices, gold. If I want to trade the dollar specifically, oftentimes I can trade things like TLT, I could trade bonds. So that's where I've pivoted more in that direction over the years. Anyways, speaking of gold, I am still long gold. The thing about gold here is we're sitting still at a level of support, and there's really not a lot for me to do on this gold trade. We've just really gone sideways, and you've got this level of support. From a technical perspective, really simple. If this level breaks for me, then I'm out of the trade. And if it holds, I'll keep holding it. So from a technical perspective, keeping it very, very, very simple. Let's talk fundamentals for a second, though. Let's talk about let's do this really quick. I'm just going to scan for metals only so we can see this a little cleaner. Okay. So why is gold getting a bullish reading? Well, the commitment of traders data looks pretty solid for gold. Institutional money, very long gold overall. Seasonally, it's a decent time to be bullish gold. GDP, PMI numbers, these numbers, as I referenced earlier, from the US specifically, because we're talking gold against the US dollar, they came in light, and that slowdown in the economy. By the way, you also saw it in cooling jobs data. So don't get it confused. These numbers are blue because the calculation of our algorithm says if economic data is coming in light, give a bullish score for gold in our system, right? So we're scoring assets and symbols, etc. So what we can see here is, again, you've got a nice little uptick in the bullishness for gold, simply because the economic data has been coming in really light. So yeah, I am still bullish on gold. I like the story to the upside. If it doesn't work out, it doesn't work out. I'll take a loss here. What about the NASDAQ? We'll take a look at the NASDAQ in just a moment. So this is the updated P&L on GLD. So I'm up just about $1,000 on the position currently. Yeah, we're in the green. We're in the green for now. It's a little too early to call it though, as this really has not exploded off of, the pullback area that we're at. Again, when we look at gold, I'd like to see this start putting in some higher highs, right? That would give me some confidence to maybe trail a stop and feel a little better about this position. Right now, it's just too choppy. Like we haven't made any move. But remember, choppiness for me is not a reason not to enter a trade. I can enter into a choppy market if I just like generally the fundamentals and I can just wait out the chop. So right now, gold is not making any huge moves, but I'm a swing trader, so I don't mind just holding through it. And that could lead to, me getting stopped out, or it could lead to consolidation going higher. And I think based on my, my reasonings for entry, that gold will go higher, but that's not a certainty, right? We never know with certainty what the market's going to do. It's always just educated guesses and risk management. What about NASDAQ? Let's talk about the NASDAQ. So don't get it twisted. If you're a day trader, you think, oh my goodness, NASDAQ, crazy move today. But, look at this. Here's the daily chart. This is just a little tiny bit of a pullback. We haven't even come back to a level of support. So if you're a day trader, actually, and you're bearish on the NASDAQ today, in terms of where this thing could move, you're talking about a pretty good slip. It might not happen right away today, but if this market wants to pull back, I mean, you could see a 1 to 1.5% pullback on the NASDAQ pretty quick. From this peak, that would be a drop of just about 2%. But in terms of the NASDAQ, hourly chart, you had this, break of structure here. And watch this too, because the market just opened up just 6 minutes ago. I'm talking about the US stock exchange. The stock market just opened up. So watch for a break through that low. That could signal, you've got high volume right now. So as volume ticks higher, if you see a break through the low, that could be interesting. Again, I'm not really a day trader, so I'm not looking to, trade the break of the daily low. But I know many traders love to trade that. They love to trade, a new daily low. If you break through that, that could set some more lows, right? But we'll have to see. So this first hour of trading is going to be pretty pivotal. If you're watching the NASDAQ, if you're watching the S&P 500, same story. It looks very, very similar. So we broke out through this low, big push lower. But now that the market has opened up, let's see where the volume takes us, because I think that will give you, a little bit more clarity on where the market will end up today. You have to remember pre-market moves. Why was this down? Well, you did have some names that reported earnings. Uber was down, at 1.8%. A big one that slipped real hard here today was actually Shopify. Look at Shopify. My goodness, down 20.5%. What a remarkable move lower on Shopify. If you're a shareholder, I'm sorry. That's a tough day. Happens to the best of us. But that is a rough sell-off for Shopify today. My goodness, 20%. That's a huge dip. The dollar index seems to be holding support pretty well at this level. And, I mentioned this earlier, so I won't repeat myself too much. But basically, why is the dollar index up? Well, it's because other central banks that, the RBA yesterday coming in sounding more dovish than expected. The Bank of England might come in more dovish than expected tomorrow. Comparatively speaking, the dollar could still be in play, even though we had some weak economic data. Remember, as I ranted about earlier on this video, currency trading is difficult because you have multiple parties involved when trying to trade a currency pair, right? You have the UK and the US. You're trying to analyze the, intricate market data between the two of them now, rather than just looking at the US or just looking at, the UK, which I've mentioned earlier is why I love trading something like gold or, TLT, like bonds specifically, because then I can isolate and really just focus on the US economy, the US, jobs data, whatever. VIX is up just mildly 1% here today. I'm very curious to see what happens with this on the NASDAQ here this morning. Again, here's your 30-minute chart with the opening candle here. Let's see how that looks in the next hour. I'm very curious. If you take out these lows, like I said, if you roll back over, that could short-term be a bit of a bearish move there on the NASDAQ. But again, right now, this market just has been on a win streak here. So, 1, 2, 3. Yesterday, a little bit of a hammer candlestick pattern. Today's the day, I think, where you either see follow through on that candle, right? That rejection that we got intraday yesterday for the NASDAQ? Are we going to close, like this? In which case, if you get actually a really strong bearish close, here's a picture to paint too. If you get a strong bearish close, you could argue that that looks a little bit like a lower high, right? We topped out around 18,400, 18,500, somewhere around that area. If we put in a low here, or we reject the 18,000 or the 18 handle, right, on the NASDAQ, yeah, that could be a little sketchy. Oil still coming down here this morning. Silver's flat. Gold still just kind of flat. Yields are up this morning. I think that's part of the reason why you're getting a little bit of a pullback. Little bit of a pullback here. Yields up on the day. Of course, that's gonna scare certain markets unevenly, right? Here's the Russell. The Russell, of course, really dislikes higher yields, because if you're seeing hot inflation, sticky inflation, the market will not like that, and disproportionately will the smaller companies like the Russell will really not like that. But right now, that the trend for yields arguably looks like it might have cracked. Like we might be seeing yields continue lower, which could arguably be a weakening factor for the dollar. But more importantly, the recent pop in the NASDAQ is really, I would argue, probably thanks to yields coming down, right? People got really excited about the jobs data coming in light and the PMI data coming in light. People, Wall Street is they're cheering cooling data. They don't want crashing data, but the cooling data is exciting for the stock market because it means yields come down and expectations for interest rate cuts start to rise. Pwagwes. So, yeah. Thoughts on UJ, if you don't mind? Yeah, let's look at the dollar yen. The dollar yen is just a crazy currency pair right now. And so, while I have struggled with my thoughts on this one, the dollar yen is just such a rocket ship. I mean, if you scroll out on this thing has just been trending higher for a long time. Look at that. Going back from really all of this post-pandemic period, the dollar against the yen has just been just a straight shot to the upside. Now you've had these big, aggressive, violent intervention pullbacks. And is that going to be this? We'll see. But again, the dollar, in my opinion, still looks relatively attractive. If you're seeing cooling economic data globally, like if you just had US stagnation, then I would be just bullish on other things if there's growth in other areas. But what seems to be the story is the US has had outsized growth from its peers. And now that growth is causing, a stickier inflation story. I was playing around with our inflation chart this morning. Let me pull it up. So check this out. We got the big four here: UK, Europe, US, Japan. What you can notice here is that the blue is the US, and US inflation data has been kind of sticky, right? But what you'll notice here is that if we draw a little bit of our hand-drawn inflation for, let's do the UK, right? Let's draw some lines, and what we can see here is that inflation data seems to be cooling pretty reasonably for the UK. Okay. What about Europe? Europe? I wonder if I can draw moving averages directly. Like why am I doing this by hand? We're an automation company. Maybe we need to add some line charts here. Anyways, inflation seems to, sort of be flattening for Europe. But really what you can see here is that the US inflation is the sticky one. And it's largely, at least in the eyes of Jerome Powell, due to outsized US performance. The link to the Telegram, you want the link to, well, if you're an Edgefinder user, you can find that, is when we look at the inflation data here. Okay, you look at the comparisons, you say, okay, US outperformance could still lead to the dollar, especially if you get, if you get hotter than expected prints on the next go around for inflation, we got issues. But if inflation in the US just mildly, slowly cools while the other ones are cooling much faster, you could argue that that's because the economic data for these other places is weakening much faster. And that would make, again, comparatively speaking, the US dollar look a little bit more attractive. So there's your inflation data update. So when we look at Japan, though, what about Japan? Japan's inflation is kind of an interesting story, but more specific, the Bank of Japan is a winding story here, because the Bank of Japan has been fighting this fight for a long time to keep the exchange rate. They don't want the exchange rate to keep going up. I think it hurts their trade with other places when the US dollar is just very, very expensive to them. And so they don't want this exchange rate to be so high. The thought process is that the Bank of Japan, or the Ministry of Finance specifically, has pushed back and basically supported their own currency by buying their own bonds, selling US dollars, etc. So that's the idea.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.